Good morning. It is Tuesday, January 26th, 2021, and we are almost through the first month of the year. It's actually been a strangely and nicely nothing sort of month. Really, nothing's gotten done. Washington's just being Washington, and Packers lost, so I get my Sundays off now. And finally getting a snowstorm in Milwaukee. Looks like we're going to get 7 or 8 inches. Nice blowing. Looking out the window. I'm thinking to myself, all right, I've had my snowstorm. I can be done with this. So looking at a lot of calls and puts, the market is in general still overbought and gravitating towards a topping range. If you take a look over at Sentiment Trader, you can see that the smart money, dumb money index is still hovering at extremes on both sides. Smart money doesn't want anything to do with buying, and the dumb money just keeps bidding it up. Although we've gotten to the point now where the market is choppy and we're seeing some very quick rotations in the market. I think there's really only one thing that you can do, and that's the same thing that you can always do, which is assess the amount of risk you want to take. So somebody was asking me about selling cash secured puts on a stock that had gone straight up at the same time that somebody was asking me about selling a covered call. We've been through all these parabolic straight up charts. Look, generally, it's you hit the jackpot, you need to start scaling out. There's no point in writing covered calls initially. You sell something and then you scale out. So the stock that I'll show you today that you need to be selling, and again, not selling all of it, but enough of it, is one of my favorites, SunPower. So you take a look at SunPower and you go, okay, all sorts of times I mentioned buying it, and now it's up here. You ought to be trimming it. You ought to be trimming probably your entire profit. So if you have an average cost basis of 8 and the price is 45, 8 divided by 45, whatever that is, it's about 6. You got to be selling about 5/6 of your position. So the gain from 8-ish to 45-ish, 48 right now, you got to just sell $40 worth. Pretty easy concept, right? Mathematically, you just keep your original investment in it and you sell the rest. And then if SunPower comes back, now maybe in here you start to sell a cash secured put. I wouldn't even bother selling a covered call up here because you know that it's gone parabolic, right? Overbought on the weekly. MACD is crazy. I don't know if we can find it. This is the last time it spiked, way back in 2012. And the whole solar industry spiked back then. I remember it well. I made a ton of money on SunEdison, and then I sold it all. And then it went bankrupt. Now, I don't see any bankruptcy in SunPower's future. However, this is the sort of chart you say, okay, we're at a key level as best as we can figure out. The retraces don't much help us. The extensions don't much help us. This is what matters, is you have very little volume, very few buyers at this point. You've had a prolonged period of institutional buying, and that's probably going to turn red here soon. Stick with the overbought signals. On a weekly chart, when this happens, it's telling you to take profits. When a monthly chart does that, you just need to take profits and sell. So SunPower, you don't bother writing a covered call on. You just sell like 85% of your position, depending on what your cost basis was. You can leave your original investment in there. Again, going through the filters, the only one that's a little bit interesting right here is Delta. So you take a look at Delta, and I've added back in the institutional pressure. So red means the institutions were bearish, and green means the institutions were bullish. So Delta, you're getting a little bit of a bearish tinge here again. You can tell it ran up, and then it leveled off. Delta probably has support in the mid 30s. So you take a look at their puts for February, and you go, okay, so we don't want that close to the money. If I sold 35, I'm only going to get like 50 cents for it. Look at the massive open interest though. So somebody is speculating on it falling again. Or somebody sold a whole bunch of cash secured puts saying to themselves, I'd be cool having this put to me at 35. I think that's about where I'd be cool having it put to me. I don't think I want any of these bigger premiums up here. So I think the stock can get down into this 35 to 32 range, which is what the chart said, right? Right about here is where you're going to get really big support. You see right here, that's been a support zone there. I think that that's probably about right. I know it's hard to see with those. I wonder if there's a way I can change transparency. There is. Oh, that's much better. Look at that. All right, we'll save that. Just want to know where the institutions are going here. All right, so another one to take a look at is Sirius. I talked about that last night, and I think I have it posted already. So I do think you should own this stock. I don't think we need to look at all that right now, but it's in this choppy area. I think it's going to break out. So Sirius, I think, is something you should be selling cash secured puts on, and you're going to like this one. So if you sell the $6 cash secured puts, I actually know somebody who was doing it yesterday. I don't know how many he sold. And it wasn't 10,000, but it was a few. You get 30, 35 cents. So that's a pretty big premium, right? 30 cents in the $6. That's a pretty big premium. And you're getting 5% to hold that for 3 weeks, 4 weeks. So I think you can load up. In fact, I'm going to probably make that trade once we get done, is you can sell cash secured puts on Sirius, the $6, and collect 30 cents. That's a 5%, that's a 60% annualized return. And you're going to have a hard time beating that. And this has John Malone and Warren Buffett behind it. It ain't going anywhere. Embedded, right? Embedded revenues, trading at low valuations. This is an easy one. You should be all loading up on these puts here so that if it gets put to you, you'd end up with like a 4% position in your portfolio. Square, let's see what Square's doing. Yeah, that's a very weak signal. You need to get down into here. What is going on? Oh, monthly, I had it on. There you go. Yeah, that's a very weak signal. It needs to keep coming down right in here. This buy zone is about right. It needs to go well under 200. Merck, I took that off the plug and play yesterday with their vaccine trials failing. I think it's got to come pretty far back. I think the buy zone's probably still close. See, if it breaks through here, it's going to get all the way down to here. I would have a hard time buying it. Yeah, I'd have a hard time getting into this one before it gets to about 75. I just don't think it's that sexy to begin with. Not without that vaccine. Yeah, this level here, there's a long-term 0.5 level. Yeah, 70-ish on Merck. If it gets back down there just because the dividend is so big, I got a feeling it's probably going to get there for you. A little under 70. So you look at the broad market, 508 results for covered calls. I mean, holy cow. Apple, it's saying sell covered calls. Ford, that's wrong. Just too low of a valuation on Ford to sell covered calls. Kinder Morgan, that's wrong. Too low of a valuation. Microsoft, how do you do it? How many people own 100 shares of Microsoft? Qualcomm. SunPower, like I said, I just want to trim that. Okay, none there. You set up your screener, 50-day relative strength over 60. And actually, I can change that. Let's get rid of that. Go to the 20-day relative strength. Longer period usually is good. 20 days is a month, and a month is usually semi-important. Be a little bit more accurate. Or some activity. You need some open interest. That's about right. Actually, that's probably the one. Right about at the money is what you're looking for. Bid price, at least 25 cents. All right. So let's see what we come up with here. This is our entire universe. Just not that many. Apple, Applied Materials. I don't think you should own that at all. Antero. Baidu. I don't know if anybody owns Baidu. Bought that a long time ago if you do. But here's another one of those charts. If you own Baidu, you know, just had quite the rebound. It went back. I mean, this is a stock. When you see a chart like that, you shouldn't be asking, should I be writing a covered call? You should be asking, how much do I sell? Just run it into resistance again. See, triple top. So what are the commies going to do next? All right, GE, end phase. End phase is another one. Again, it's not something you ask yourself, do I sell covered calls? It's just, how much do I sell? It's clearly overvalued by double or triple. I mean, hugely overvalued. J&J is interesting all of a sudden, isn't it? Looks like they're maybe going to be one of the vaccine winners. But they're so big, how do you move the needle on this company? Clearly, this area here is an area that it wants to be in. certainly can get down to here. I don't really want anything to do with J&J. It's not a good enough company for us anymore. There's just not enough upside. Mosaic, here you go. Let's take a look at Mosaic. Basically doing the same thing that Nutrien did. If you owned Mosaic, or let's take a look at Nutrien, since a lot of you do own Nutrien. I think Nutrien is probably a good one to sell a covered call on, right? It's running into some resistance. Planting isn't for a while. So take a look at Nutrien. I'd like to hold on to it because it has a good dividend. Probably doesn't have a lot of risk. So if you wanted to sell like a 52 or a 53 or $54 covered call on Nutrien, I think that's a pretty good one, right? Take a look at the chart. Say, well, looks like it's probably running into quite a bit of resistance, running out of buying pressure, right? This is where people sold, right? This is referring back to here because they haven't got there yet. So people sold it down to here. They had your sell-off in March, came back, and now it's either got to break out or chop along. My bet would be it chops along for a while, at least until planting season, which a few months away. So I think you're in pretty good shape to sell one of these covered calls on Nutrien. Depends on how much of the stock you have, how badly you want to hold on to the dividend, and hold on looking for a breakout down the road. But I think you'd go and write that $54 or $55, $53 covered call on Nutrien for sure. Here's a utility that's way out of whack. Utilities aren't supposed to do that. And the one thing I will tell you about the income potential from these utilities is that it's a very saturated market, right? There's utilities everywhere. And then you have independent power producers, the decentralization of the grid coming, people producing their own solar, huge incentives for that coming. I don't think I'd want to be in NextEra Energy here. I think that down here is where you can buy this one, around 50-ish. I mean, I guess if you were aggressive and you thought that somehow it was going to keep growing the way it's growing, you could buy it in the 65, 70 range. But even that's pretty far down for utility. That's about it. Somebody asked, what criteria do I use for cash secured puts? So if you're using bar chart, I look for a 20-day relative strength below 50. Right, that basically is a month, 1 month chart. I'm looking for days to expiration under 60. I'll take a look at the weekly expirations. Generally, you want to trade that's today, but I put in 2 sessions just in case. You want some volume, and you have to have good open interest, and then you can sell them pretty far out of the money. You can, and if you really want it put to you, you can sell it a little bit in the money. And because some of our prices are lower, you just do that. There's not too much to it. I mean, the main one here is use the 20-day relative strength and below 50. And then when you get that number, which is going to be more accurate than the 14-day, then you come up here and say, okay, what are we doing on the weekly chart, which would be 14 weeks versus 20 days. And that's because this doesn't have a weekly period. But the original turtle traders and other traders and the whole cycle with the calendar is based on the month. So a 20-day relative strength is a pretty good signal for people who are doing this type of trading because it'll be a little bit more accurate than the 14-day. Signal won't be as timely, a little less timely, but more accurate. And because we're going to go and look at the weekly chart anyway, all right, any particular stocks that you want to look at? No, somebody asked about Maxion. I don't really have much of an opinion on this company. I like how they're positioned in Asia. I like that they have to deal with SunPower. However, it's an input company, right? They don't have any way to scale up without having a lot more expenses. So in general, I'm trying to stay away from those companies. I like the subscription-based revenue companies. I like the companies where you have clarity on the revenue. I like the companies where they can add business at a fraction of adding expense, where the margins are 30, 40, 50, 60, 70, 80%, like in subscription-based revenues. That's why I like AT&T so much. I mean, I didn't bother showing AT&T, but, you definitely can sell puts on AT&T. Sell the February 30, get $1, or it's 29 if you don't want to be in the money. So what is that annualized return? About a 30% annualized return on selling a put on AT&T. You should probably be pretty happy with that. Barrick Gold is going to be the same way. I And you really should just be writing these calls on, or excuse me, writing these cash secured puts on Barrick Gold and AT&T until you're up to your 4% position. 0.95. Let's do this. $23. 0.73 by 23 times 12. 37% annualized return. And that's hard to beat, right? That's what I just said. Sell cash secured puts on AT&T. Freeport McMoran, you should just be trimming the stock, right? We've looked at that before. They have earnings today, I think, down 317. Did they report already? They might have reported already. So we talked about this last couple of weeks. You should have been trimming it or selling covered calls. I mean, this level right here is where it wants to go. This is in a high liquidity world, maybe where it will stop. It's what it wants to do. This is, this could become new support, which is why this line is up here. I'm going to change all these settings again. All right, I think that's about it. Again, the market is peaking out in liquidity. That's been talked about now by a couple of big brokerages, Wells Fargo, Morgan Stanley, Goldman Sachs, Citigroup. They're all saying that, look, liquidity is not going to increase anymore. So that means that slowly but surely the liquidity whittles itself away. Now, because the Fed isn't actually pulling anything out, it's not going to go down very fast. But I still think that you're seeing a lot of fast rotations. You're seeing huge speculation in cheap stocks, which is why I want you to get some Siri, because I'm hoping that they'll speculate on that one. Earnings are right around the corner. Never know who on Reddit's going to start talking about Siri. Serious. So those cheap, small stocks, especially the ones that have a short interest, are catching the attention of the traders, and they can bid them up pretty quick. So I took a look at the short interest charts out there. The short interest levels, should really be looking at those companies with huge short interest, but you can identify that they're a good company. You might get Reddit on your side. Komatsu is almost in our buy zone. And if you go over here to ARK, this is their autonomous technology and robotics ETF. Komatsu is one of their bigger holdings. She hasn't bought it in about a week. I take a look at the purchases that she makes. I would think that this one is something she's going to add to real soon. There isn't an option on it. So I would say just get ready to start scaling in on this one. There's a pretty good floor on it. And this one will actually be mentioned in the stocks of the week, which I'm going to finish up sometime today. But I think limit orders, down here, 26 to 25, 24. Limit orders in here probably make a lot of sense. This price right there, about 25. I'll probably put my limit orders in at 25. That'll be my first order. Not really any option market on this either. All right, have a good one. I'll get this put together later today, get it on the internet, and finish up the articles for this week. Take care.